Thanks for tuning into this conversation. It's important to take stock of what some of the most experienced traders are thinking about the markets at the current context, wherein bond yields in the US are jumping up and US markets and the global markets indeed have come off over the last few days. Our markets have not been spared either. Dr. CK Narayan Johnson to put it into perspective. Dr. Narayan, thanks so much for taking the time out.
Thank you for having me over.
Now, the pleasure is ours. Dr. Narayan, how do you look at the markets? I mean, you had mentioned in this note that you write for BQ Prime that there could be a period of some bit of choppiness ahead, say for the last week of September. It's kind of panned out that way. What is it? What is the latest market action telling you, both global and local?
Well, as we got into September, we were, as a part of a very strong uptrend, which ran slap into a bit of a resistance. And that was one of the reasons why I said that we might get into a consolidation. Second point was that I use a lot of time cycles. And based on those time cycle studies, I found that, the balance of September, let's say, whatever, 15, 20 days of September, say for the last 1 week or so, as well as much of October. So totally, you could say some, 35, 45 calendar days. I think that period was not looking very bullish in the sense that I had very few days with very strong bullish signatures. So when that kind of situation shows up on the time cycle charts, then it has been my observation that the markets get into a bit of a consolidation and become pretty choppy as far as indices are concerned, leading since we were into a very strong uptrend. So some amount of pullback was to be expected. Post this pullback, I think we'll get into a consolidation. The market will get rather boring and it will become extremely stock specific. So we have seen say about 3 sharp days of decline, down with gaps as it were, in both Nifty as well as the Bank Nifty. We have seen a lot of stocks getting damaged, and that's more because individual traders are having positions, long positions in stocks, but in indices, I think the majority of the trading is in options. So the option movement, moves the indices to a limited extent, whereas long positions built up to a substantial degree in individual stock futures. I think that is getting unwound, and that is why you're seeing a lot of damage in individual stock. So combined, the two are producing a little bit of, let's say, sentiment depression. But I really wouldn't worry about it too much, except for the fact that we are not going to have an immediate upside. Now, if that is a cause of worry, then I think for the next several weeks, that is going to stick with us. But as far as the down move is concerned, I'm not overly worried. I think very soon we'll hit a support level either by Monday or Tuesday.
Okay, so you do believe that there is a possibility of a sideways market for the next few weeks?
Yes, I do. I most certainly do.
Okay.
And the initial portion has been down because we ended a nice strong uptrend. So that is not a surprise.
Got it. The other piece, Dr. Narayan, is what happens at the broader end of the spectrum, even as the Nifty and the Bank Nifty presumably consolidate, because that had an even sharper run up the last 3-4 months. So do we continue to see a bit of a corrective move there?
Well, I think corrections are part of the deal, right? And everybody was waiting for corrections, and now that we have it, now the entire focus is when is the correction going to get over. Now that is very, very typical of the market, but I do believe, price cycles run their length and the time cycles will run their length. So I think the market will be in a corrective mode overall. That is, kind of across the board. But the caveat, if you may want to put it that way, is that come the second week of October, we'll also start off on the earnings season. And once we get off onto the earnings season, then it becomes very stock specific.
Sure.
Stocks which will surprise the market will be rewarded or they'll be done if the numbers are not good. So I think till about the 10th of October, we might be in a very range bound action. And post that, we might get into a very stock specific thing. But the choppiness of the market will still still kind of remain, but we'll have enough news flow and analysis flow and reports and all that to keep us all busy, that the choppiness may not really matter, because we are quickly slipping during the meat of the choppy time. We are slipping into the earnings season, so I think that will save the day.
Last couple of questions. One is on pockets which have been hitherto underperformers. If we are in a sideways market and if the results show okay, can they do well? So, for example, results notwithstanding, Dr. Narayan, what do the charts of IT tell you?
Well, IT was a bit down in the dump because they had dropped about 20-30% across the board. So a rally there was not anything out of the ordinary. But I think the way this higher for longer business, which has been now, I think, being accepted across the US, I don't believe that we will see very good commentary coming out of the IT companies. And I don't see this rise which is happening in IT as anything of a larger kind. So my sense is that if your IT stocks go higher for whatever reason, maybe in anticipation of results or whatever, I think it will be a good chance to exit from some of the less performing items. This may also include the leaders. I think there are some exceptions which are more in the mid cap area. Your KPITs or your Zensar Tech or your one or two persistent systems and all of that. Depending upon what commentaries come there, more than the numbers. I think nobody doubts the numbers. There are and all IT companies are cash rich, so they are not going to fall into a heap. But if buyers are not going to step up, then they can just drift like they have drifted down 30%. It will not surprise me at the end of the rally they drift back again another 15% from the highs that they reach. So I'm not bullish on IT.
Not bullish on IT. The other thing, Dr. Narayan, that has confounded a few people is the weakness in private banks. Relative weakness, or in certain cases like HDFC Bank, absolute weakness too. Now, do the charts indicate downside there? Do they indicate consolidation, or at some point of time cycle wise or otherwise, that there could be some bit of an uplift there later on?
See, undoubtedly, the view of the market towards the financials is still very, very bullish. HDFC Bank, post the merger, there's been a lot of chit chat, that analyst meet which came, and now reports are coming out, etc. But then, if you take let's say a 10-year or a 20-year return from HDFC Bank, that will go into some 5,000% or some obscene figure like that. Given that as a background, I don't see people dumping HDFC Bank, even if the next 2-3 quarters are not going to be good, because of the pedigree of the bank and because of the way they have worked at it over the past decade or more. I think the sense of confidence in HDFC Bank pulling it through is very, very high. So okay, the stock may drop down to some 1400 levels and all that as a part of a reaction. The key thing to see is the two parts. Whether the very large ownership in HDFC Bank, does it shift to the other banks? Notably, I would think ICICI Bank would be the prime candidate, and the trends there currently are much better than ICICI Bank. So my sense is that yes, some amount of money will move out of HDFC Bank and get into ICICI Bank, but I think this the inclusion in the JPM list and all that, and that is going to really benefit public sector banks. And then the trends in public sector bank stocks have been fantastic, and they continue to remain patent, and they are actually seeking higher prices. State Bank has been a bit of a laggard. We'll know the reasons for it as we come along, but then there are stocks which are picking up very, very well indeed. Can Bank, Bank of Baroda, stocks like that, and even second tier banks like Karur Vysya and so many others to name. I think the focus of the market will shift there. Everybody has been focused on the private sector bank. Why? Because there's been such a huge focus in option-based trading in both Bank Nifty and Fin Nifty. And these private banks are used to move the indices on a weekly basis. So there is a lot of additional or ancillary movements which are also associated in the private bank. But I think fundamental shifts in the PSU banks, which do not have that much weightage in Bank Nifty today, but I think that's a matter of time before some of them get better weightage and people shift their focus. And if a stock from PSU banking or the second tier banking, let's say the other federal banks and the likes of that, if they're all showing you promise of going up whatever 20, 30, 50, 100%, then I think the market is not going to shy away from them. And private banks may go into a long consolidation and things may shift towards the PSU banks. So I'm very bullish yet in PSU banks and very selectively in private sector bank, ICICI Bank being the main one.
Got it. Dr. Narayan, always a pleasure talking to you. Thank you so much for taking the time out and being with us today.
Thank you once again for having me.
And the pleasure was ours, viewers. Thanks for tuning in.